Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Besant's economic D-Day. The Treasury Secretary tells anyone doing business with Iran to cut ties or face sanctions, putting the U.S. on a collision course with China. Chips down. A global sell-off in chip stocks extends as investors assess their exposure to technology shares ahead of earnings this week. And ceasefire threatened. Israel accuses Hamas of planning attacks using kites and balloons, giving the Iran-backed militant group until Wednesday to stop or face reprisals. It's just gone 8 a.m. across the Emirates. I'm Abir Abu Omar in Dubai. Let's start the show with a quick look at where equity benchmarks are sitting. S&P futures not doing much this morning, flat to the upside, of course. That follows negative sessions in all the major benchmarks yesterday. That sell-off in tech stocks ahead of earnings this week, namely that NVIDIA report that comes out tomorrow, the bellwether for the AI trade. We'll see if it solidifies the rally that we've been seeing since the beginning of the year. But for the time being, S&P futures flat. We're keeping an eye, of course, over the past week or so on the yields, the 10-year yields, 4.71%. They have been at that level for quite a while. We're seeing them a little bit higher this morning, 2 basis points higher, but they've pretty much held the level we're now seeing them at since yesterday. And then, of course, Brent crude prices, 0.4% higher, $92.5 on the barrel. Of course, that economic D-Day plan announced by Scott Bessent. We'll talk more on the show about that. And then we're changing things up a little bit this morning, focusing in on Bitcoin, which is above $80,000. It remains, of course, well supported thanks to the geopolitical and domestic political tailwinds. So an asset that, of course, we're keeping an eye on, but also investors are keeping an eye on. The rapid acceleration over the past 5 days or so in Bitcoin are now throwing it above that level of $80,000. But we haven't spoken about what Asian equities or markets are doing this morning. And for that, of course, we have Winnie Su in Hong Kong for us. Winnie, what do you have for us this morning?
Yeah, good morning, Abir. Well, we are seeing Asian stocks falling for a second day. Well, it is overall a bit of a risk-off mood, but perhaps this calm before the storm, if I can say. Now, there are a couple risk factors that we are watching. You just mentioned how oil climbing back up on this whole sanction situation that we are seeing for Iran, but also a bit of a trade friction when it comes to U.S. and China. That plus how the global yield environment is still looking a little bit wobbly right now. And we are seeing investors trimming some of these positions ahead of the two big events. We have NVIDIA earnings and, of course, that Jackson Hole meeting. So overall, a bit of a downside in terms of tech stocks in the region, really leading declines today, with the Kospi here down almost 1%, led down by the chip makers Samsung Electronics and SK Hynix. A bit of a bright spot when it comes to financial stocks, but overall, we are seeing a bit around the same number of stocks that are up and down for MSCI Asia. Now, another drag here we are seeing is in tech stocks in Hong Kong, let down by the EV maker XPeng, which actually reported both quarterly earnings and third quarter outlook, both missing estimate, with the stocks down about 10%. Back to you, Abir.
All right, Winnie, thank you as usual for that update. You'll be back with us in 30 minutes or so. Now back to the geopolitical story. U.S. Treasury Secretary Scott Bessent has threatened economic punishment against any country doing business with Iran. This is part of what he calls an economic D-Day campaign to end nearly 6 months of war.
I want to emphasize that we are spreading out across the world as we speak, that you will see a wave of sanctions when you leave this meeting today, and you should expect that cadence to continue. And I would expect that you will see a major announcement of a financial institution being sanctioned by the end of this week.
Let's bring in Honor Ant, our managing editor for the Middle East and North Africa, and Alan Wong, who leads our China economics and government coverage. Honor, I want to start with you in essentially that latest remarks that we heard from Scott Bessent. Finally, we understand a little bit more what that economic D-Day plan looks like. How realistic is it for Iran to capitulate after this announcement?
Well, how Iran will respond will definitely, to a large extent, depend on whether or not the U.S. follows through these threats to impose secondary sanctions on countries that do most of the business with Iran. And number one there is obviously China, the main buyer of Iranian crude that buys about 90% of Iranian oil. Obviously, there are other countries that also do a lot of business with Iran, such as UAE and Turkey. Yeah. But really, it all comes down to China. And there we have seen both Scott Bessent and the rest of the U.S. administration walking or treating very carefully. They're not even trying to name China in these press conferences, such as Scott Bessent did yesterday when he spoke about the economic D-Day. And if the history is any guide, we have seen President Trump himself make similar threats on countries that do business with Iran as recently as last year. I believe it was in May, and they never followed through. So without the U.S. really following through those threats, especially to impose economic penalties on countries that do the most business with Iran, it's very difficult to see why or how Tehran would capitulate.
Yeah, and our Bloomberg economics team also states that the press conference left a lot of questions unanswered about just how exactly we're going to see this implemented. Alan, I want to turn to you for the China perspective. Of course, we have been reporting that China is, the country that will suffer the most of these secondary sanctions if implemented, as Onur just mentioned. But then we're also seeing a return to the tariffs story, 7.5% before that visit by Xi Jinping to the United States in September. What can you tell us about that, and how realistic is for that to be implemented?
For sure. I think I'll start with a simpler story on tariffs. So our reporting shows that the U.S. is looking to impose just enough tariff to keep overall U.S. tariff level on Chinese imports below the line that China and the U.S. agreed on at their last presidential summits. So that means that on the trade front, the relationship is still very much on track. And this is coming just less than a month before President Xi and President Trump are going to meet in the U.S. this time. That is certainly a signal that they want to keep that on track. But now onto the more complex and unpredictable part of the story. How's China going to react to the latest threat on the measures over Iran is still an uncertainty, because China typically only responds to measures after they're announced, and the D-Day turned out to be a day where Bessent made further threats and not announcing those very threats. But of course, he dropped hints that there'll be a main financial institution that could be affected by the latest U.S. measure by the end of this week. Whether that's going to be Chinese or associated with other countries, that's something that we'll have to wait until the announcement. But if it is China, then we do have an issue here, because China has demonstrated that it will hit back at U.S. measures. And previously, when the U.S. sanctioned refiners in China, China ordered its companies not to comply with some of those U.S. measures. So for those companies involved trapped in the middle, now they have to think about weighing their losing potentially access to the U.S. financial system or disobeying the Chinese government, which I don't think is an option for them. But China will then have to make that call.
Yeah, definitely a lot of questions left to be answered. Alan, thank you for your time. Of course, Alan Wong, who leads our China economics and government coverage, and Onur Ant, Bloomberg's managing editor for the Middle East and North Africa. Now let's carry on with this conversation and the geopolitical repercussions with Julia Roknifard, senior lecturer at the School of Law and Governance at Taylor's University, Malaysia. Julia, good morning. Good to have you with us. Just the start to this conversation, I guess, is with a simple question. How realistic is the implementation of those secondary sanctions that Scott Bessent was touting in his press conference yesterday?
Yes, the announcement per se, I think it goes along with what President Trump, the threats that President Trump was issuing towards Iran before. What we are hearing now from Mr. Bessent. However, the implementation leaves us, as you said, with more questions than answers. The enforceability of that, if before we could talk about some sort of unity in the implementation of anti-Iran sanctions, currently, I think that unity, if there was any, it has eroded. And it will be hard to force the coalition that is going to comply with those sanctions and also effectively block Iran from trading with the others. So it might just turn out to be just a tough.
Okay, so Julia, I mean, at the heart of all of this is, of course, energy and energy supplies. Do you think that somehow these sanctions will down the line affect Iran's ability to monetize its oil exports?
I think Iran has been so heavily sanctioned for many decades. It has proven the ability to find alternative routes and to supply its energy to the buyers, primarily to China at this point, and to circumvent sanctions in all the different ways. So I do not think it's going to be effective as well, because there are mechanisms that are in place. And with this war and the escalation in the Strait of Hormuz, the blockade of the Strait of Hormuz, I think there's even less appetite to comply with the sanctions that are going to affect the energy security of other states, and hence their readiness to preparedness to comply with those sanctions instead of using those.
I think we've just lost Julia's connection there, but of course she was talking about the impact of those sanctions on Iran. I believe we have Julia again. Julia, can you hear us?
Yeah, I can hear you.
All right, Julia, just one more question about essentially the retaliation. How can Iran retaliate? What do you think the retaliation would look like if these sanctions were to go on for long? Because what we've heard from the economy minister is Iran is prepared. It's got a couple of years of being ready for those sanctions. But then ultimately, do you think we go back to military strikes?
I don't think there's going to be a military retaliation for the sanctions, but there's going to be military retaliation for military action, for any other kinetic escalation that we might see against Iran. And Iran is prepared to escalate in Kuwait. It's prepared to escalate in Bahrain, not only via military means, but by other means, even potentially depriving Bahrain of the leadership that is aligned with Saudi Arabia and hence with the United States. But and even Iran threatening Bulgaria at this point for agreeing to provide the military bases and their refueling opportunity to the U.S. fleet. So that is in response to the military action. As for the sanctions, I don't think Iran is going to do anything as long as the blockade in the Strait of Hormuz holds, or it goes by the rules that were agreed in the Memorandum of Understanding, or if there is no military escalation, then Iran is not going to escalate militarily against the sanctions.
Okay. Then Iran will not escalate militarily. We will have to wait and see how those questions get answered. Julia, thank you as always for your time. Julia Roknifard, Senior Lecturer at the School of Law and Governance at Taylor's University, Malaysia. Now, for a look at some of the other stories that we're following this morning, Canada will reportedly announce retaliatory tariffs against the U.S. on Tuesday. This is after President Trump threatened to double levies on Canadian autos to 50%. Prime Minister Mark Carney says he remains open to negotiations if Washington changes its approach.
The goal of our trade negotiations with the United States has always been to get the best deal for Canadians, never a deal at any price or on any time frame. Well, we made progress, and we did make some progress in recent weeks. In the end, that momentum reversed, and we could not accept what the U.S. had offered, nor could we give what they asked.
UK Prime Minister Andy Burnham says he and other European leaders plan to travel to the U.S. next month to lobby President Trump on Ukraine. Burnham's comments came as he visited Kyiv on his first international trip since taking office. He told Bloomberg that European leaders are considering a meeting around the UN General Assembly in New York with a view towards securing U.S. Patriot missiles ahead of Ukraine's winter. And the Trump administration has launched a new proposal to charge companies roughly $103,000 for each candidate they sponsor under the H-1B visa scheme. This follows a decision by a federal court to strike down its previous plan back in June. And critics say the fee is so onerous that it would effectively shut down the H-1B pipeline for foreign-born professionals. Now, still ahead, Dhabi Capital discusses how markets are reacting to the U.S. Treasury Secretary Scott Bessent refraining from giving any further signals on plans to revamp U.S. debt management. More details ahead. This is Bloomberg. Bonds are in focus after U.S. Treasury Secretary Scott Bessent refrained from giving any further signals on revamping U.S. debt management. Here is what Bessent had to say in response to questions on whether he will increase bond buybacks in the near future.
We haven't bought a single bond yet. The next time we have an operation is September 9th.
Joining us now to discuss all of this is Dhabi Capital's Senior Portfolio Manager, Rashmi Garg. Rashmi, good morning. Good to have you with us. A lot has happened over the past week when it comes to bond markets. When it comes to treasuries, though, how concerned are you about these elevated yields?
Good morning, Abir. And yes, the elevated yields have definitely been a story which have been impacting the markets. I think currently the volatility that we see in the market is partly due to the elevated yields, because as we all know, when yields are high, then your cost of capital increases. And therefore, we are likely to see, especially companies which have long-term growth priced into their valuation move down. So definitely this is a concerning factor. And I think more concerning here is the fact that there is no tangible plan on how to handle these yields or how to bring these down in a sustainable manner. So I think that is really the bigger concern here.
But Rashmi, what I'm hearing from a lot of people is there's a lot of concern, there's a lot of underlying factors, but this is not yet a headache for the wider bull market that we're seeing. When does it become a problem? When does it start to bite into those rallies that we've been seeing across equity markets?
Yeah, so that is the million-dollar question, Avir. I mean, clearly higher yields we know are not good for equity markets. Exactly when do they start impacting? I think we've already seen some impacts on the market in terms of, if you see the dollar debasement trade, if you see, in the wider markets, generally there are other currencies, the dollar has been going down, and we've seen some Asian currencies appreciating against the USD, which in the longer run is not great for the Asian technology names, because these are all exporters and that impacts them negatively. And so that is one part of the impact. The other thing is, I think when the credibility of these financial institutions is in question, which I believe is the case right now. I mean, sudden sort of, announcements like, the bond buying announced by Treasury Secretary Scott Bessent recently, or, the lack of clarity on the reaction function from the Fed, from Kevin Walsh. I think these are things that rattle investors, because investors, they want stability, they also want predictability. So I think these are the things. And I think if we see like 30 years go close to 6%, definitely, or the 10 years get close to 5%, that is the time when we really see the markets getting really roiled.
Okay, so 5 and 6%, that's a good benchmark. Rashmi, NVIDIA also reports tomorrow. What do you think would constitute in its earnings a reignition, if you were, of the AI rally? And would it be drowned, do you think, by the surge in yields?
So in terms of NVIDIA, if we see the recent history, actually earnings haven't been a driver for this stock. And despite the earnings having been good, I think it's really the commentary, what Jensen Ham is going to say on the earnings call. I think there have been a few questions regarding, the capex on AI and which part of that capex is going to, give good returns in investment, and that still remains a question, especially after we've seen this huge bond issuance by hyperscaler. I think there is a concern there in the market, and then we've seen some sort of financing deal between, the likes of Nvidia and other players in the market, and that if we see some clarification on these issues, then I think maybe the market is going to like that. Also, in terms of their margins, I think that is going to be a key question, because we've seen memory prices being very high. So if we see some improvement in margins going forward, I think that might be a driver for the stock.
Okay, Rashmi, just very quickly, Jackson Hole, Kevin Warsh, does he have room to be dovish, or a different approach has to be taken there?
I think you will need to take a different approach, because the thing is that, right now, the way investors are seeing the efforts from the administration, Scott Bessent trying to boss the yields, I think he really has to deliver a message where it tells investors that he's macroeconomically aware, the reaction function of the Fed is intact to data, and that they are going to do what it takes to tame inflation, and they are going to do what the backdrop requires. I think that is what is needed from Kevin Warsh, and if he is dovish, it might be taken as a signal that he is not doing the requisite.
All right, then I guess we'll have to wait until Thursday to see. Rashmi, we're going to have to leave it there. Today, Rashmi Garg, Senior Portfolio Manager at Dhabi Capital. Now, we have plenty more ahead. Keep it here with us. This is Bloomberg. The U.S. SEC is set to have sent subpoenas to major Wall Street banks over the hedge fund's situational awareness. Sources say it's seeking information about trading activity at the hedge fund, which came under pressure last month. Situational awareness liquidated some of its positions amid a barrage of margin calls during an AI stock rout before Citadel stepped in to buy the bulk of its bets. Smart ring maker Aura is set to be seeking to raise as much as $3 billion in a U.S. IPO. Sources say the offering could happen as soon as September, valuing the company at more than $16 billion. The company has gained a following among consumers looking to measure health metrics with something less cumbersome than a watch. And Saudi Arabia is planning to build a theme park complex near Paris. That's an investment expected to amount to $7 billion over several years. The deal was personally kickstarted by French President Emmanuel Macron and Saudi Crown Prince Mohammed bin Salman. And the park will include at least one area dedicated to Japanese manga, which a French official told Bloomberg the two leaders have a shared passion for. Keep it here with us for more on the show. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Bessent's economic D-Day. The Treasury Secretary tells anyone doing business with Iran to cut ties or face sanctions, putting the United States on a collision course with China. Chips down. A global sell-off in chip stocks extends as investors assess their exposure to technology shares ahead of earnings this week. And ceasefire threatened. Israel accuses Hamas of planning attacks using kites and balloons, given the Iran-backed militant group until Wednesday to stop or face reprisals. It's just gone 8:30 a.m. across the Emirates. I'm Abir Abamar in Dubai. Let's check where risk assets are sitting at 5:30. Of course, S&P futures turning a little bit higher this morning, 0.1% higher, a little bit of moderation from the moves we saw yesterday. Down for all the major equity benchmarks in the United States. That's the SOX gauge, that is the S&P 500 and the NASDAQ 100, all dropped yesterday. Of course, we keep an eye on two things happening later this week. Nvidia earnings out tomorrow and Jackson Hole on Thursday. Perhaps a little bit of more light from Kevin Warsh on what exactly the guidance by the Federal Reserve is going to be until the end of the year. And then we're keeping an eye on the big story of the past couple of weeks, which is the Treasury notes. The U.S. 10-year Treasury yields are at 4.71%, a little bit more than that. So elevated, still elevated, despite having moderated over the past couple of sessions. We're seeing them about 2 basis points higher this morning. Brent crude not doing much this morning. That plan by Scott Bessent announced yesterday did not do much to shift the narrative in markets. So we're seeing Brent crude at around $92 on the barrel. But what we're looking at today, and this is why we're changing this board a little bit this morning, is Bitcoin, which has surpassed $80,000 for the first time in a while. It remains, of course, well supported thanks to the geopolitical and domestic political tailwinds that we have been seeing. So good news for Bitcoin investors. But for a look at what is happening in Asian markets this morning, we've got Winnie Su in Hong Kong for us. Again, Winnie, what do you have for us?
Yeah, good morning, Abir. Well, we are seeing Asian stocks pairing a bit of the earlier losses, but overall, investors seem to be still staying on the sidelines because of all these risk factors that we are looking at. We have oil climbing back up just a bit on the Iran sanctions, but also the ongoing U.S.-China tariffs, as well as the overall yields still remain quite elevated. Now, of course, you just mentioned that caution ahead of NVIDIA earnings and Jackson Hole meeting, and that's really dragging down the risk sentiment in Asia. We have South Korea's Kospi index here leading losses down about 0.3%, with losses mainly led by SK Hynix and Samsung Electronics. So the chip makers tracking those declines from the U.S. overnight, but also tech stocks in Hong Kong showing some weakness as well. We are around the lowest level in 7 weeks, and today's drag really coming through from XPeng, which is a EV maker in China that has announced earnings as well as the next quarter outlook, both missing estimate. But interestingly, it also announced that it is trying to raise $900 million for its robot unit. So lots of fundraising events going on in China, and flip the board and see how that's affecting the broader Chinese market, because we are seeing these money going to the IPO markets, going into fundraising. We had Alibaba yesterday raising $10 billion for its share sell, and also some of these listings that we are seeing. So those money going into the IPO market and pressuring the overall sentiment and market liquidity on the secondary trading market. That's why you are seeing the overall turnover actually getting lower right now, hovering just around its lowest level since April. And for the Chinese market, it's also facing some of the other headwinds. You have overall lack of catalysts following that broad sell-off in the chip stocks because of the elevated yields, but also macro environment in China remains quite weak, as what we saw from the latest economic numbers as well. Back to you, Abir.
Winnie, thank you very much. Really not a pretty picture in Asia this morning. Now back to our region. Israeli officials have accused Hamas of using kites and balloons to plan attacks in its territory. The Iran-backed militant group was given until Wednesday to rein in their use or face repercussions. We've got Bloomberg's Dan Williams joining us now from Jerusalem with more on this story. Dan, good morning. Just what more can you tell us about this accusation from Israel? Where is it coming from, essentially?
Abir, it's an uncanny story, quite eye-catching to any global viewer for whom kites are associated with childhood innocence. In the Gaza Strip, 8 years ago, well before the current war, Palestinians, Hamas members did use kites and balloons to fly flammable material and explosives across the border into Israel and set alight large tracts of farmland, forest, etc. At the time, this was seen as a measure, a form of hostility, asymmetric warfare that fell below the military threshold and put Israel into a conundrum as to whether to retaliate militarily. Now the situation is very different. The Gaza Strip's been ruined by that Israeli offensive launched after Hamas's cross-border raid of October 2023, and all parties, it would appear, are hoping to bring this toward a peaceable conclusion, specifically the Trump-led Board of Peace, which is there trying to convert a ceasefire into peacemaking. Now, the balloons have reappeared. Sorry, not the balloons. The kites have reappeared as of now without flammable material. However, the Israelis are wondering if, again, Hamas is trying to test Israeli patience, maybe provoke Israel into attacking, maybe even rebuild its arsenal from the ground up with this very asymmetric weapon something that many Israelis along the border were there yesterday fear could simply be a matter of deja vu all over again.
Okay, and Dan, just what exactly has the response from Hamas been? And then you alluded to this a little bit in your answer, but what does this whole thing mean for the wider peace talks, the Board of Peace plan?
Hamas has been publicly dismissive. It's accused Israel of seeking a pretext to go back to war. I think what we should be looking out for, Abir, is whether in the time remaining until that deadline you alluded to tomorrow, that Israel relayed to Hamas via the Board of Peace, that international consortium handling Trump's peace plan, whether indeed this abates, this phenomenon stops. We're talking about 8 to 10 to 12 kites that came over since the weekend. They're still being found. And if they stop coming over, it would appear the message has been received. These are not ordinary child kites. They have long strings, in one case 4.5 kilometers long. In general, that's not something you see with kids' toys. It would appear there's something here that's being tested out potentially ahead of a weaponized form of these kites or balloons or perhaps drones. If it stops by tomorrow, it would appear that the message was received in time.
All right. Bloomberg's Dan Williams in Jerusalem, of course, for us. Now, moving on to a different part of this region, Turkey. Turkey's central bank said on Sunday it would resume weekly repo auctions at its 37% policy rate. The decision is a step towards normalizing funding conditions as the central bank bets the worst of the Iran war's economic fallout has already passed. So joining us now to discuss this is Selva Demiralp, professor of economics at Koç University. Selva, good morning. Good to have you with us this morning. Of course, after that report came out about the 37% return, do you think the confidence that the fallout or the worst of the fallout from the Iran war has already passed and that this decision is in the right place?
Yes, I think this is a signal that the central bank views the worst of the war is over, at least for the Turkish economy. But when I say that, I should note that what central bank is focusing on is financial stability as opposed to price stability. So I don't think the central bank thinks inflationary pressures or the worst of inflationary pressures is over per se. However, in terms of reserve accumulation, for the last 3 weeks, the central bank was able to accumulate reserves. And that's why I think this move towards normalization is consistent with the central bank's reaction function. But in terms of inflation, for example, when we look at the August survey of Koç University household inflation expectations, we see that inflation sentiment for the last 12 months actually went up from 51% to 53%. So it's not because central bank thinks that their inflationary pressures are coming down, but reserves are accumulating, capital inflows are at a healthy pace. That's why I think they had the green light.
Okay, and Selva, how much room do you think the central bank can maneuver around rates, especially with inflation still above 30%?
Yes, that's why I wanted to emphasize that inflationary outlook doesn't permit the central bank to consider aggressive easings. But I think the first step that was announced over the weekend is to bring policy rate back to 37%, the effective policy rate, funding rate to 37%, which already happened yesterday, by the way. We were expecting perhaps a more gradual move towards 37%, but it happened right away. Now, until the end of the year, I think the central bank perhaps has another 2 percentage points room for additional rate cuts. That's because they have to be careful about the dollarization trend in Turkey. And because of the high inflation rate, it is the real interest margin has to be sufficient to convince Turkish households to keep their deposits in Turkish lira-denominated assets. And for that reason, I think the central bank will continue easings consistent with the decline in inflation to keep the real rate intact.
Okay, but what would it take to reverse course? Do you think a weaker lira? Do you think a surge in oil prices or a re-escalation in the geopolitical tensions? Would any of that cause the CBRT to change course, essentially, or reverse the trend?
When we think about a traditional central bank reaction function, we think about the Taylor rule with the output gap and the price gap. But for me, our central bank's reaction function has this major international reserves as the primary trigger for rate changes. So what the central bank will be looking at is whether reserve accumulation, which at the moment the gross reserves are around $183 billion. If they can maintain their reserves around those levels, I think they will be able to cut. But if they observe a decline in international reserves, which would be closely related to what happens to the war, in that case, they may have to slow down and they may even consider to go back to 40%, an informal increase in interest rates. But I don't think that's what their baseline scenario is.
And Selva, how much does this normalization impact the transmission of monetary policy into the real economy, especially after months of tighter financial conditions?
So the transition is going to be slower than a traditional monetary policy rate change. That's because we also have tons of macroprudential tools in place. One of them is the bank's 60% requirement to keep the Turkish lira-denominated deposits relative to total deposits. And what is happening is that with the debasement of the dollar, with the appreciation of gold, banks' foreign deposits are appreciating in value, which means that banks need to attract more Turkish lira-denominated deposits to maintain their 60%, which means they won't be able to cut deposit rates in parallel to the easing of the central bank's funding rate.
Okay, Selva, we're going to have to leave it there with you this morning, but thank you for your time. Of course, Selva Demiralp, Professor of Economics at Koç University. Now, coming up, frontline workers face violence and intimidation as they struggle to contain the rapid spread of Ebola within the Congo. More details on that story are coming up next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. A crowd armed with machetes chased after Ebola responders who were trying to bury a victim in Eastern Democratic Republic of Congo. The violence is one of the latest attacks on frontline workers struggling to contain the rapidly spreading pandemic. To discuss this story, I'm now joined by Bloomberg's chief Africa correspondent, Jennifer Zapasaja. Jen, good to have you with us. Just over 100 days at this point since the outbreak was declared. Where are we now when it comes to the Ebola outbreak?
Yeah, that's right, Abir. Just about 100 days and about 14 weeks since we did get that official declaration of the Ebola outbreak. And right now, from what we're hearing from officials, it's becoming even more difficult to contain and respond to the way that this outbreak is spreading. Just to give you a bit of context right now, just over more than 5,500 people have been infected by our latest numbers, and just over 2,642 people have died. For comparison, back with the last Ebola outbreak in 2013, it took that outbreak more than 30 weeks to reach the comparable number that we have now in terms of infected cases. Right now, we're about 14 weeks after the epidemic was declared. And so really what we're hearing from officials on the front line is that this virus is spreading faster, it's spreading wider. Our reporting is that it's now covering an area larger than France, just to give you that insight. And as you were just mentioning there in your intro, we're seeing violence, strikes, and also shortages of key supplies really making it difficult for frontline workers to not only figure out and try and stop some of this transmission, but also to really address the current situation on the ground there. So it's still quite a precarious situation for East Africa and for the DRC.
So, Jen, has any action been taken then to quell this violence that you were just talking about?
Well, I think what's important to note, Abir, is why this is happening. In this country, a lot of the concern for health officials is a lot of the traditional burials that do happen could, in fact, compound and make it even more difficult for some of the spread. And so what we have been hearing, at least more recently, is that some of the violence is perhaps targeting some of these burial sites. And so it's important to note that that is happening. But it's also important to note that we're also seeing acts of intimidation around some of these healthcare officials. What we heard from one UN senior Ebola coordinator described the conditions facing frontline workers as, quote, brutal. And he said the outbreak is growing faster and wider than the Ebola response. And so frontline workers are doing what they can, but it's important to note that a lot of these traditions are a part of the culture. And still, from what we've heard from a number of officials in the country and elsewhere, there's still quite a bit of mistrust. So that is still, knowledge is still very much a part of this. But for officials and for healthcare workers, they are working to quickly approve an Ebola vaccine to hopefully quell some of the concern here and also the transmission and spread of the virus.
Jen, thank you, as always, for following that story for us. Of course, Jennifer Zapasadja joining us from Johannesburg. Now, MTN briefly saw its biggest surge since March yesterday. This is after the mobile network operator said it will buy back $375 million of shares. The decision comes as write-downs in its Iranian joint venture weighed on its most recent earnings. U.S. sanctions on Iran, of course, in place since 2018, have stymied MTN's efforts to sell its 49% stake in its venture in the nation. And coming up, what a change in leadership at the Saudi capital markets regulator could spell for the country's equity markets. That is coming up next. This is Bloomberg. Leadership changes at Saudi Arabia's capital markets regulator have revived optimism for further liberalization. It has hoped that Mazen al-Sudairi's entry as chairman will spell a highly anticipated easing of foreign ownership limits, which could bring billions to the country's equity markets. So to discuss this story, I now have Bloomberg's Middle East ECM reporter Laura Gardner-Cuesta joining me on set. Laura, good morning. What can you tell us about Mazen's entry as chairman and about his new tenure?
So he was appointed earlier this month, and what we know is that he has experience at some of the biggest, the kingdom's biggest investment banks as a researcher. And he's also very well connected in the political establishment. So the hope is that he can push through some reforms that are highly anticipated, like you said. And the key one is this foreign ownership limits. So currently, investors can only own 49% of Saudi companies, foreign investors. But last year, the CMA, the former chair, said they were considering a review and lifting these limits. And if they do, this could bring up to billions of dollars. Morgan Stanley has estimated up to $7 billion. So this could be a huge change for the kingdom's capital markets. But the reality is we haven't really heard much about what the timeline is, when this might happen, since February, really. So we're hoping that with his new entry, we'll get a sense of how this is going to happen, what the timeline is.
Okay, and then besides the foreign ownership limits, the 49%, what else can we potentially expect out of his chairmanship?
So his appointment comes at a time where the kingdom's equity capital markets are going through quite a bit of a downturn, and not just because of the war. This really started, I'd say, a year and a half ago. So we started seeing weak debuts and a lot of IPOs, and the trickle of the boom of IPOs that we saw a few years ago has really slowed down to a trickle. So I think it's hoped that he'll be able to spearhead some more streamlining timing of these processes, changes to allocations in some of these IPOs. So we had a story earlier this year about how bankers are pushing for less allocation to retail investors and mutual funds because they think that there's not much demand from these segments of the investor base. So why are we allocating more to them?
Okay.
Well, things like the fact that companies have 6 months to list once they get the approval. That means that sometimes they're having to go out into the market when the market conditions are not good. So a bit more flexibility in these things.
A bit more flexibility then, Laura. Of course, you'll be reporting on that flexibility if it were to happen. Thank you. As always, that is Bloomberg's Middle East ECM reporter, Laura Gardner-Cuesta. Now, before we head to the end of our show and our day, a quick look at where equity benchmarks are sitting. S&P futures still flat to the upside. NASDAQ 100 futures 0.3% higher, reversing what we saw at the close yesterday. Dow Jones not doing much. And Euro Stoxx 50 futures tilting a little bit higher as well. Brent crude, of course, not doing much this morning after that Scott Bessent press conference we saw yesterday. That is it for Horizon's Middle East and Africa today. Stay with us for Daybreak Europe. This is Bloomberg.